Hi everyone, hope you're all doing well, and today I'm going to be talking about a stock that I added more shares into yesterday. And I was kind of like looking through my stock market portfolio, and to be honest with you, everything in there right now is green, and it's green by quite a lot. And I'm looking at a lot of these companies and I'm like, I can't buy that one, I can't buy that one. And I've got a little bit of cash on the side, and I was looking for opportunities, and then I spotted this stock had gone down 6%, and I was like, yes, I'll go buy that one, because my average in general, I was down about 10 to 15%. So I was like, that's a very good time to start averaging into this company, and I'll reveal which that company was in a second. Now, if you could smash the like button, that would be absolutely amazing. If you are new around here, make sure you subscribe. And just on a side note, look at that Jet2 earnings the other day. Not a bad time to take 10% off the table. After taking 10% off the table, stock went down quite a bit after its earnings, posting a big drop, a big loss. And I just want to say something on that point very quickly. I think some people get a little bit of what I call green eyes, and sometimes people get hung up on the gains in the portfolio. And what I mean by that is people invest something like 5,000 into a company, or 5,000 into the stock market, for example. And let's say that stock or their portfolio goes up to 10,000. So they've kind of doubled the money. But they still don't sell their stock, they still don't sell their portfolio, and basically what that happens then is their stock really, or their portfolio, is still only worth 5,000. And let's say they run that for 5 years, 10 years, and they never use that profit to their advantage, and their portfolio never snowballs, it never scales up. All they have is that little green number in the portfolio that says they're up. But what happens next day if a crash comes along, and that crash knocks their 100% gains down to 20% gains, and you've had your money in these companies, in these stocks, in this portfolio for maybe 5 years, and your gains are wiped out overnight, and you could have used them profits to make you more money, and you never snowballed your portfolio. That's something you've always got to be careful of, because that's something I had a bit of comments in yesterday, is like, why are you selling out some great companies at great averages? I'm not. I'm just taking some profit off the table, and with that I can let that go snowball now, and I put that free money that I've made, that money that I'm putting in isn't a lot of my money now. It's half that money is money that I've earned through the stock market. I've just doubled my money for free, and now I'm using it, and that will go make me more money. And then when I sell out again, I've now quadrupled my money. I go put it in a company again, and that's how you snowball your portfolio. That's how you make a lot of money in the portfolio, is by taking your profits, money that you've earned, money that wasn't yours that you've taken now, and you make that even more money. That's how you snowball your portfolio up, not by looking at a company and looking at that number that says you're up 100%, because that is not profit until you've taken it off the table. And I thought I'd make that point very, very clear. Now, anyway, going back onto the topic of which stock it was that I bought yesterday, I was kind of looking through my stocks, and I'll be honest, I was looking at Beyond Meats, and I was like, I really like this company, I want to buy more of it. But the problem is I'm up like somewhere between 5 to 10% right now, and I was like, please go down. Like, I'm doing my stock market crash dance at the moment. I'm hoping for Beyond Meats to go down. I want to buy more, but it's not moving in the right direction for me, so I'm hoping it does move down. And on a side note, I did try Beyond Meat's burger the other day, Beyond Burger. I went to Tesco's, I picked it up for £4, which was a little bit expensive. Hopefully, if they get a factory in Europe or UK, maybe that'll drop it down to £3.50 or £3. Maybe that'll be a little bit better. But I went to go try the product, because I thought, if I'm putting a load of money in this company, I really do need to try the product. I also saw Manual Finance on Instagram. He posted about it, and he said he didn't like it. And yes, I went to Tesco's, tried it. I posted it all on Instagram if you follow me on Instagram. And I went there and tried the burger. And I'll be honest, I was a bit stupid. For some reason at Tesco, they had it in the freezer. And I was like, damn, I don't know if I can have this right now. So I looked at it, it said, not recommended when eating when it's frozen. I did sneak it in the microwave, put it on the defrost setting, and then I had it, which probably wasn't the best move, so I'm going to bear that in mind, that the taste might not be that good, or I might just generally be sick in a few hours. But anyway, I tried it. It was very good. I would give it a good 9 out of 10. The only two things that I was a bit unsure on is there was a little bit of a taste when it's not cooked. A smell when it's not cooked. It's like I ate it raw. There was a bit of a smell when I didn't cook it. When it's raw, I don't know if I like that smell. It wasn't awful, but it wasn't amazing. We'll put it that way. And also, maybe it was a little bit dry, but at the same time, I only had a bread bun and I also had the burger. I didn't have any, like, you know, any sauces in it or any salad or anything. So maybe that was kind of a factor that played into it. But overall, I was very happy. I would definitely say that it is on the level of an actual beef burger. And if I had the choice between a Beyond Meat burger or a beef burger, I could have either. And to be honest with you, with how much I love food and meat in my diet, it'd probably actually be a good move to that actual plant-based pate. So it was very good, and so I'm kind of hoping Beyond Meat goes down. If it doesn't, I actually still might buy it because I think it has a lot of potential after trying that product. But anyway, back onto the topic once again. So I was looking at that sort of stock, it wasn't down, and then I was going down my portfolio and everything's just doing absolutely amazing at the moment. But one stock was down 15%. And it had a negative 6% movement on the day, which was Tattoo Chef. And I was looking, I was like, wow, this is now the good opportunity to go buy into this company. And I did. I bought some more Tattoo Chef. I increased my position in this company by 40%, which was a bit of a big jump. And like I said, I left myself loads of room to average into this one because I do believe that with being a SPAC stock, it has a lot of potential to come down. And you look at some of the stock chart on this one, and it is down huge. The ticker symbol is TTCF. And like I say, you know, $28 at one point, absolutely insane. And yeah, it's down to about $15 now. The stock's gone down 50%. I don't know if that was just, you know, the pure hype of it coming on the stock market, but I was like, okay, this is a pretty good opportunity to go buy it. And for you guys that don't know, it is a bit similar to Beyond Meats, but I never think Tattoo Chef will be as massive as Beyond Meats because it will never have like the corporate deals like Beyond Meats does have. But its ready meals have so much potential because they're so early days, and you know, when you think about them, they're a big growing industry, only in the US, got international growth still ahead of it. Massive potential. And the great thing about this one as well, I think the valuation side of it, trades at about a 1 billion market cap, which is insanely cheap when you compare it to something like a Beyond Meat. When you look at the price to sales ratio, it's a free price to sales ratio on a growth company growing at 60%. Absolutely mental. Free price to sales ratio. This company is dirt cheap. I will go as far as saying right now, this is the cheapest growth stock on the stock market. This company is trading at stupid valuations. Mental. Free price sales ratio, 1 billion market cap for this company. Really cheap. And like I say, I think even though it's in the early days of this company, I still believe that over the next kind of even year potentially, I'll go as far as saying a year, it could double in a year. Massive upside. And I'm trying to think of the reasons why it's dropped down so much. Like I said, I don't know if it's the SPAC hype. We look at Q3, maybe one of its mistakes, it brought out preliminary Q3, which basically means it brings it out before its actual earnings to go, hey, look how good we are. And I think maybe everyone was expecting good earnings. They did the earnings out and then there was nothing exciting and people have just been selling since then. Maybe it was just bringing Q3 out too early. Maybe that's what it was. And maybe they should just brought it out on the normal day. But even Q3 was amazing, 65% revenue growth. And like I say, when you look at the growth factors of this company for Tattoo Chef, you know, it's only US, it's got massive potential to expand. It's got a massive deal with Walmart. It's got a massive deal with Costco. And a lot of them two deals are just in the early stages, you know. They're not in every single retail location, you know. Throughout this year, they're going to be ramping up. And through 2021, they'll probably get to every location. So you look at them sort of supermarkets, they're still not fully expanded yet. So there's a lot of room there. It looks like they've just confirmed they are going to go with Target. I think they were doing a trial. Looks like they are going to be going into a few stores now with Target. I couldn't confirm if it's every store. There's no confirmation on it. But yeah, they are online. They are in a lot more stores. So yeah, they're going into Target as well as Walmart and Costco now, which is definitely a bonus. And they only recently launched their e-commerce site. So you think about that wasn't even in Q3. Obviously that should help Q4. So there's another factor that's really going to help this company grow over the next kind of 12 months. So overall, definitely an amazing opportunity here in this one. I think it's probably the cheapest growth stock on the stock market. And like I say, saw Tattoo Chef down. Probably one of my only positions that's down right now. And yeah, I bought some more, so I thought I'd update you with that situation. I think it's a fantastic growth company. And yeah, I am hopefully going to be buying even more in this position over the next kind of 2 months. So hopefully it doesn't shoot up just yet. Hopefully we need Q4 for it to shoot up. So I am going to hopefully buy some more over the next 2 months, and hopefully it stays down, unlike Beyond Meat. But still, I might buy that one. I don't know yet. But yeah, I thought I'd update you with that one anyway, guys. A few guys were asking after the drop as well yesterday, so hope you found it useful. And if you could, smash the like button. If you are new, please subscribe, and I'll see you in the next video.